and Charlotta, welcome, and thank you for taking a few minutes to talk to us about the 2021 outlook. So now, Guy, beginning with you, you must be glad this year is almost over, although you did predict a global recession, did you not?
I think, Bianca, we're all very pleased this year is nearly over. Yes, we did actually predict a recession, but of course we didn't predict a pandemic, which of course was truly awful. But we had underlined the fact that the global economy had vulnerabilities and a fragility that left it very open to any kind of exogenous shocks. And that's exactly what we had in 2020. I think, though, from where we stand and what we saw in the early part of this year, the important thing for us was trying to plot a path forward, making sure that the group and our customers understood just the magnitude of the stimulus that was being provided to avert this health crisis, developing a depression, a financial crisis, and not extrapolating the downsides. Everybody, when markets are falling rapidly, there's always that danger people extrapolate that. And our point was make sure that you understand the drivers, understand the support mechanisms to get a better gauge of where these economies and where these markets were going to go. And I think as a result of that, we felt fairly upbeat as we got through the summer and into the autumn months that we were going to have a very sharp V-shaped recovery. There was a lot of pent-up demand as economies began to open up again. And indeed, I think that's largely what we have seen. But there's no doubt that the end of this year will be very welcome.
Absolutely. Now, turning to your 2021 outlook, which is entitled Great Expectations. This suggests that there are some happier times ahead. So what are some of the key drivers behind the title?
Well, I think given where we came from in 2020, there is a lot of expectations. Sorry, Charles Dickens, for taking your title, but I think it's, there's much needed hope and optimism that's beginning to come through. And I think a large part of that being realized centers around, of course, the vaccinations that are going to be rolled out in the coming months. Not immediately, but that will, I think, give people and companies greater optimism. Psychologically, it's important. It allows you to start thinking about spending again, thinking about business investment. And as a result of that, given the still early stages of what we think is a new economic cycle, we think that the year could turn out to be pretty decent from both an economic and a financial market perspective. So hence the title, Great Expectations.
Thank you for that. Now, Charlotta, just turning to you, and Guy touched on this a little bit. So the vaccines, it seems that they are still a few months away from being available widespread. So does that mean there could be some rougher times before things get better?
Yeah, unfortunately, I think the winter is going to be quite hard and cold, particularly in maybe in Europe and US, where infection rates are rising very quickly, unfortunately, and we have new restrictions coming in as we speak. Critically, though, I think it's going to be very different from what it was during springtime, because we had a lot of positive developments around the vaccine. We know that there are ways out of this pandemic. So this should help to support both sentiment and confidence in the broader economy and spending, of course. But despite this, I think, and we keep saying this, it is that policy support, the support mechanism. It really has to stay in place over this winter period to avoid a deeper drawdown.
Now, Charlotta, also looking again at the title, Great Expectations, what are you looking at to gauge if these expectations are being met?
Well, for 2021, the inflection point really is vaccine, and it's a mass rollout of a vaccine program. So that will be the key one, monitoring. But in terms of the economy, what we're really looking at is whether activity is holding up, whether the stimulus, the support measures are extended, are provided. We're seeing that in most regions. Maybe the US is one place where we really need to get some more fiscal support to get you through this winter period. And then finally, but that will come through a little bit later, is to look at the service sector, the sectors that are most affected by this crisis, traveling, hospitality, restaurants, to see whether or not activity is picking up there as well. So these are the key things we will be monitoring over the winter.
Thank you, Charlotta. You already alluded to the US, and now looking forward, we will have a new US president. So what does this mean for global policy and trade?
Yeah, it will be of course, very important. Maybe before touching on the US, in particular, maybe the US-China relationship, maybe two developments which I think are really positive around global trade. The first one is that throughout this crisis period, there were fears that supply chains would break down, that this would be a kind of a trigger for a deglobalization trend where you simply brought home production. That's not really what we've been seeing. Global trade has been resilient. You had a very strong tech-driven rebound in Asia, but all regions have participated. And I think this really shows that this urge to trade, it is not that easy to break it. There is incentives and there's a desire to trade between nations, and that's a very, very positive takeaway. The other one was that there was a very large trade agreement recently signed between Asian nations. It will be, when it's signed off and comes into place, hopefully next year, it will be the world's biggest trade agreement by population. Roughly 1/3 of the global population will be covered, and by GDP, roughly 1/3 of global GDP in the fastest growing region of the world. So I think that also highlights that trade is not dead, but it might look a little bit different going forward. Now, the final touch point which you asked me about was really about US and China and the relationship going forward. Will that change dramatically with the new administration? I think our view is that the underlying tension is still gonna be with us. It's about the emergence of China as really a global superpower, and the efforts of the US to contain or to control that process, and that will not go away. The way it looks, the way it manifests itself might be slightly different, less confrontational, maybe slightly more cooperative, but this is something we need to monitor going forward.
Thank you so much for that holistic overview, Charlotta. And now, Guy, turning to you and the financial markets, which have pleasantly surprised many of how quickly they've rebounded. Is there still an upside for next year?
Well, we think so, Bianca. You're right. I mean, it was not only was it a dramatic fall, but the recovery was perhaps more dramatic that we saw. It was one of the fastest, sharpest recoveries ever. And of course, that was a function of that kind of profound policy support, both at the fiscal and the monetary level, the fact that the central banks were effectively backstopping a lot of these financial markets. And as we look into 2021, we still believe that's going to be the case. We still think that further support is going to be there to bolster the recovery. And as a result of that, again, financial markets should do well. Now, I think when we think about the fact that this is the start of a new economic cycle, usually we see the equity markets perform particularly well. Credit has been a stellar performer so far, but we think that the equity markets are likely to really take up the baton in this coming year. And that's going to be a function of strong earnings that are coming through. We think that dividends are going to be once again growing. And again, we think that in this very low yield environment, that investors are going to be encouraged to still chase higher returns. And that's going to lead, we believe, still to equity markets doing well. Now, credit markets, it's not that they do badly. We still think that credit markets are likely to see further spread tightening for some of the same reasons that I mentioned. It's just that they're somewhat more limited in terms of the upside, given how tight spreads already are. But of course, the other asset class that we think about closely are very much, of course, is the bond market. So, Charlotte, I mean, given what we're thinking about the economic recovery, what about the bond markets, and thinking particularly about these very low yields? Are they likely to stay this way for a long time yet?
Yeah, so we don't think bond yields are going to recover in line with the broader economy. Policy support is still going to be with us. You have central banks, in particular the Federal Reserve, that will keep rates on hold for longer because they are very concerned about inflation that has been undershooting their targets for a long period of time. So the rate hiking cycle is likely to be delayed compared to what we gotten used to in the past. Of course, they're going to extend asset purchases, which tend to push down on bond yields. And also, while the inflation outlook should improve from here, we do expect disinflationary forces from these huge economic and social shock to continue to linger. So taking it all together, we suspect the bond yields will continue to be capped on the upside. They should edge higher, but not a big move higher.
Thank you, Charlotta. And now, Guy, one final question. So what are the risks for your outlook?
It's always that tough final question. Well, I think there are unfortunately many risks, but I think the key risk is probably around still the virus and importantly vaccinations. If you think about trying to vaccinate millions, if not billions of people, that is a logistical nightmare by any standard. So getting the vaccination program rolled out in a quick, efficient manner without any glitches, hiccups, I think is a real challenge and shouldn't be underestimated. So I think any kind of issues around that is likely to lead to, again, confidence being undermined. Maybe we have further lockdowns from an economic perspective, and of course that would, be a negative for the markets as well. So I think that's the primary risk as we see it going forward. There are many others, but I think one shouldn't forget there's upside. I mean, when we speak about risk, you tend to focus always on the downside, but of course there's an upside here as well, and that is if indeed the vaccination program works well, at least to expectations or beyond. This is quite a significant tipping point that allows, as I mentioned, a lot of that pent-up demand to be unleashed. It allows business investment to be implemented. It allows economic activity really to pick up substantially with a synchronization that I think that could lead to much better than expected outcomes. So I think when we think about these risks, you have to think, yes, of course, there are many downside risks, but there's always some upside there as well, which is perhaps another reason why we have got great expectations, Bianca.
Thank you so much. And yes, let's continue to focus on that upside as well. Guy and Charlotta, thank you so much for your time today and for this exciting discussion. And for all interested, don't forget that you can read the full 2021 Outlook Great Expectations, which is available on Zurich.com.